401k rules and a single member LLC. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. And today's AdBits, second part in a 5-series podcast on solo 401k rules and entity types. Previous podcast, which if you haven't listened to, you definitely should check out, tackled the solo 401k rules and the sole proprietor. Well, this podcast is actually going to be quite similar because the contribution rules for solo 401k plans for sole proprietors and single member LLCs are kind of the same. Okay. But what I'll do is kind of talk about real quickly what a solo 401k is, eligibility requirements, and then talk about some of the other features. And then we'll focus on the contribution rules and how they differ for LLCs and some other entity types. Again, this is going to be a 5-part series. The next podcast will be on multiple member LLCs and solo 401k rules. So I'm going to go through sole proprietors, single member LLCs, multiple member LLCs, C Corps and S Corps. And then you're going to know it. That's going to give you all the information you need to know on how the solo 401k contribution rules for each entity type. So what's a solo 401k? Well, it's essentially a 401k plan like you know and probably have contributed to. That's really there for self-employed or any business that does not have any non-owner full-time employees. And a full-time employee is someone who works 1,000 hours or more or 3 consecutive years of 500 hours. So any business where you have a non-owner, okay, so someone who doesn't own any of the company, and it's not a spouse of the owner because spouses are not deemed employees, and that non-owner works more than 1,000 hours during the year and treated as an employee, or 3 consecutive years of 500 hours, in that case, the company would not be eligible to set up a solo because they have an eligible employee. But if you have a situation where it's only owners or only owners and their spouses, whether it's 1 owner, 2 owners, 5 owners, or there's employees but no one works more than 1,000 hours or 3 consecutive years of 500 hours, then you can set up a solo 401k. And why would you want to do that? Well, we'll talk about it in a second. You can contribute up to $61,000 or $67,500 pre-tax, get huge deductions. You can invest in stocks and also alternative assets like real estate or cryptos, depending on your plan docs. Contributions can be in pre-tax or raw. Very, very easy administration. If you have less than $250,000 in your plan, you have no IRS reporting requirements. So very, very easy to operate. And if you're above 250K, then all you need to file is a 5500 EZ, which is really easy, basically a page or so. And if you're a client of IRA Financial, we'll help you do it. So really nothing to stress about. So let's talk about contributions because that's really the core of the solo 401k, the main reason why people do it. One other advantage I forgot to mention is the loan. You can borrow $50,000 or 50% of your account value, whatever's less. Use that for any purpose, whether it's vacation or paying down debt, medical bills, credit card, whatever it is. You pay back over 5 years at a low interest rate of prime. And get best part, you're paying yourself back, not a bank or a credit card. Okay, so all that interest is going to your plan, not to Visa or MasterCard or Wells Fargo. So contributions. Well, like a sole proprietor, a single member LLC is an LLC that has 1 owner. That's where the name single member LLC comes from. It's also known as a disregarded entity. So it's respected as an entity in most states from a limited liability corporate standpoint, but from a tax standpoint, it's treated as a tax nothing. It's an invisible entity. Basically, the owner reports the income on his or her tax return. A single member LLC does not file their own tax return. A multiple member does, and we'll get to that on next week's episode. But on today's episode, we're going to focus on single member LLCs, which are deemed a disregarded entity for federal income tax purposes. So there's no federal income tax return for the single member LLC. The income is reported on a Schedule C, which is essentially an attachment to the 1040. And the net amount of the Schedule C, just like a sole proprietor, you take your revenues minus your expenses, you get your net Schedule C amount. That's subject to self-employment and FICA taxes. And that is what you have as your core number of what you can base your contributions off. So a solo 401k has 2 contribution components, employee deferral and employer. Employee deferral is dollar for dollar, and in 2022 it's 20,500 or 27,000 if you're over 50. Depending on your plan docs, that could be in pre-tax or Roth. Okay, and obviously you need enough income. If you only have $8,000 in income, you're only gonna be able to put in about 8,000 minus around 15%, which is the Social Security FICA number. But obviously, if you have $1 million, you're still capped at that 20,500, 27,000 if you're over 50. Then on the flip side, there's the employer contribution, which is essentially a profit sharing contribution, not based off profit, but based off the net Schedule C. And that's 20% for a single member LLC, which is like a sole proprietor. Okay, so when you add all that together, the 20,500 or the 27,000 if you're over 50, i.e., the employee deferral, and then you add the employer, that 20% of your comp, you can't go above 61,000 or 67,500 in 2022 if you're over 50. Okay, so if you made 100,000 bucks, you could do 20,500 plus 20%, or 27,000 if you're over 50 plus 20%. You don't have to put anything in, but that's the maximum you can put in. Now, what's very unique to a sole proprietor and single member LLC is that employee deferrals and the employer, the percentage, the 20%, the employer, and the employee deferral, the 20,500 and 27,000, that's not due by 12/31 like a W-2 employee. That is due when you file your return. And again, the IRS understands that most small businesses, single member LLCs, anyone reporting on a Schedule C, generally doesn't have all their information financial, tax-wise, until January, February, March, till they can sit down with their accountant and figure everything out. So there's impossible and really no way that they can make employee deferrals by 12/31. Whereas if you get a W-2 salary, you know what your salary is by 12/31, and therefore you should be able to make your employee deferral contributions by 12/31. Schedule C, you don't get a W-2. So you have to get all your revenues and expenses and make sure you have all your available expenses to reduce your income so you get your net Schedule C. And the IRS is kind enough and reasonable enough to understand that no small business can get that done by 12/31. It's impossible, right? You're still depositing stuff on 12/31 maybe. So like a sole proprietor, employee deferrals and employer contributions are due when the business or the single member LLC files a Schedule C with the 1040, April 15th or October 15th. So employee deferrals and employer contributions are due on the same time. They're not due on 12/31 on the employee side like they are for a corporation. So that's the big distinction between sole proprietor and single member LLC versus a partnership and corp, where there's different deadlines for employee deferrals and employer contributions, whereas sole proprietors and single member LLCs are all due when the Schedule C and the 1040 is filed. So there you go. That's basically what you need to know if you're setting up a single member LLC solo plan. All the other bells and whistles are the same: the loan, the ability to get exempted from UDFI if you're buying real estate and want to use leverage. There's no unrelated business tax or income tax. Whether you have a sole proprietor or a single member LLC, you can still do pre-tax or Roth. You can still do alt, depending on your plan docs. The distinction is really on the contribution side and the deadline for making the contributions, plus the 20% of the net Schedule C versus 25% for a C, S Corp, or partnership. So thanks for listening. If you're watching on YouTube, appreciate it. Don't forget to subscribe. This is a weekly podcast. And if you missed the sole proprietor one, definitely check it out. It's available. The next episode is going to be on multiple member LLCs and solo 401k rules. So if you have a multiple member LLC or you're just interested in understanding how the contribution rules work for multiple member LLCs and solo 401ks, check it out. It's about 10 minutes of your time, and you'll definitely learn something. I promise. So thanks again for watching. If you're listening, appreciate it. And have a great, great, great day, and take care.